Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. Well, today we had a little bit of change on the longer time frame. As you can see, we have traded above last week's range. The monthly, we don't see much change yet. We're still within the earlier year 4-month balancing range, but on the weekly, we have made a tremendous effort to the upside. We traded through yesterday's profile completely and through Thursday and Friday range completely and closed near the top. So obviously that change is also seen on the daily, and we now have a confirmed fail at the bottom of that trading range that we had late last week on Thursday and Friday. Uh, Obviously, when you have a fail break to one extreme, it's very often that the destination becomes the other side. That happened today. We reached that other side, and we actually took that other side. We could not sustain above that range, but the value was established pretty close to it. So that's a very positive development. Uh, let's go to the market profile because there are a few interesting things that I would like to mention there. First of all, and you can check back our previous briefing from yesterday, I did say that despite we broke from that 2-day balance range left late last week and we had a double distribution, I said that I was taking that with a pinch of salt based on the behavior I saw through the session and after the break, and leaving only that 3-tick distribution. Now, that alone obviously is not enough to say, well, I told you so. But if you know that the market is vulnerable in one direction, in this particular case, I'm talking about the structure. I know that break from the 2-day balance range didn't behave the way a powerful break should behave. Nonetheless, it left the double distribution, and actually, I need to confess, I lost some money on Monday trying to go long on that break. Having said that, when the market was trading this morning, we had the CPI before the market opened, and it was a slight bit on the data, but we saw this flush over here. I mean, the market overnight did probe below Monday's low and found nothing, went back up. And then, very close to the end, when that data came, it flushed again. And you can see that it reached almost the low of the overnight, but went back in. When I saw that, together with the little pieces of information that I saw on the day before, I said this could be it to the downside. Obviously, you know that what happened later, I'll get to that in 1 second. But that was a very good opportunity because if you go long here, look, when the market, I thought the chances are that the market will probe or at least initially trade within the lower distribution to double check what's going on there and to double check the acceptance. We happen to open at 79.50. So even if you took this opportunity to go long, you could have placed easily a stop somewhere in this single area because that will have, if this move reversed back in regular trading hours and take those singles, you know that the long position is dangerous. However, what happened was exactly the opposite. We opened within the lower distribution, and actually note that the POC, the overnight POC, moved down to this price only in these last 2 periods. For the rest of the overnight, the POC was here. And this area was the area exactly closing the double distribution. And that's why I thought a long here would be a fantastic idea. Now, the market opens, immediately sells off. But when it reaches the overnight POC, that was it. Notice that it came to the tick to the overnight POC and it didn't reach the lows. So that was like playing out my internal mindset hypothesis that something was wrong with the way we came down. Obviously, that will not cause this jump. This jump was news related, but when news, positive news in this case on the trade front, hit the wires and you have this type of vulnerability, the way this came down, obviously a lot of people went short. All those participants need to bail like really quick. And they go through the door at the same time. And this is the type of behavior that happens. Look at that. You have an immediate, like strong response, and well, the rest is history. As I said earlier, we took the high of that range. We could not sustain it. And I think that's an interesting point to mention. If I open up the profile, you see that the B extended, the B period extended, but it was immediately pushed back down. The C couldn't reach, and we came back inside that range. Some backing and filling on DE. Notice the weak, poor and weak low, enough to go back up. Another rejection on F, backing and filling, another rejection on K, backing and filling, and we close right in the middle of the thick area. Now, notice these rejections, we are getting closer. So it could be the case, I mean, the overall value established here, the move, yes, the odds are definitely to the upside, but the level that will denote change is that K high. If we start getting acceptance above that K high, for sure that will increase the odds that we will go higher. I wouldn't be surprised if tomorrow we have a lot of an inside day after a move like this. There's a lot of well, the single column is huge, so wouldn't be surprised if we retrace a little bit and trade through those prices. But yeah, definitely to the upside if we get acceptance above K. Now on the downside, if we get acceptance below the H pullback that we had, that will bring into play this weak and poor low. Obviously, as today proved, anything can happen because odds are just odds, and this market is looking out for developments on the trade front and the FOMC likelihood of cutting further. But I think the odds are good to the upside. But having said that, after a move like this, you need to be very patient and you need to manage risk appropriately. Because let's say that the odds are good to the upside and you say, I'm going long. Well, if you try to manage risk asking yourself, where is the long position wrong? You will find difficulty finding a place where the long is wrong, because what happens is that the long can be right in many places, but the risk is high. So be patient, wait for a nice area where the structure and the odds are good and the risk is manageable.